You know how you might instinctively reach for Blinkit or Zepto when that late-night craving hits?
Oh, yeah. Or, when you suddenly realize you're out of milk mid-recipe.
Exactly.
Yeah,
Well, get this. Those lightning-fast grocery apps, they're rapidly becoming something much more than just your on-demand pantry.
absolutely. What started as like a race to get you essentials in minutes is now evolving. It's really quite fascinating and, well, frankly, pretty unexpected.
It really is. So today we're plunging into a surprising development within this quick commerce world, advertising. Now, the initial story around these guys often painted them as potential money pits, as one of our sources put it, constantly struggling.
Right? The unit economics look tough.
But within that narrative, a real bright spot has emerged. And that bright spot, it's the increasingly significant role of advertising.
And it's not just ads for, chips and soda anymore, not the usual stuff you'd expect.
Precisely. The article we've been digging into really highlights this shift. It shows how platforms like Blinkit, Zepto, Swiggy Instamart, they're now prime locations for ads that go way beyond your weekly shopping list.
Yeah, we're talking financial services, stock trading
Even
platforms.
ads for real money, gaming popping up while you're waiting for your bread and butter delivery.
Wild. So, our mission today is to really unpack this. We want to understand why advertising has suddenly become such a crucial piece of this quick commerce puzzle.
hmm
Who exactly is advertising on these platforms? What are the potential wins? And what are the challenges that come with it?
And ultimately, what does this all mean for the future of these super convenient services, for the advertisers, and, well, maybe even for you, the listener, tapping order now?
Okay, let's get into it.
Okay, so this shift beyond just groceries, it's quite something, isn't it? You open your go-to quick commerce app, probably thinking about, I don't know, milk deals or snacks,
Right.
and bam, suddenly you're seeing an offer for an Axis Bank credit card or an ad for Cray UPI while your instant noodles are, like, supposedly on their way.
What's truly fascinating here, I think, is that this signals a fundamental change in what these platforms are actually selling.
Yeah.
As our source puts it pretty neatly, quick commerce isn't just selling you that carton of eggs anymore, it's also selling your attention.
Ah, okay.
That brief period between hitting place order and the doorbell ringing, that's become incredibly valuable advertising space.
And it seems like this captured attention is proving to be, well, remarkably lucrative. The numbers being thrown around are genuinely eye-opening.
They really are.
According to a report from Alara Capital back in February, the top three players in this rapid delivery game are already pulling in an annualized 3,000 to 3,000 to 3,500 crore in ad revenue.
Wow. And just to give that some context,
Yeah.
our source points out that this is roughly half of what Amazon India generated from ads in the entire fiscal year FY24.
Half. But Amazon is huge. So many more users.
Exactly. It really puts the advertising power of these quick commerce apps into a surprising perspective, doesn't it?
Absolutely. It makes you wonder, why is this such a gold mine, as the article calls it?
Well, the reasons seem pretty clear when you break it down.
Okay.
They have a growing user base, for one. People who are also using these services more and more often, high frequency.
Right. You might order multiple times a week.
Exactly. And crucially, the cost for these platforms to just, slip in an extra ad, it's next to nothing.
Ah, so it's almost pure profit.
It's almost entirely additional income, yeah.
Okay, so this raises a big question about who's actually tapping into this gold mine. We know the usual suspects, the FMCG brands, right?
Yeah.
Fast-moving consumer goods.
Your snacks, drinks, household stuff, yeah, they're definitely there.
But the article highlights this really significant emerging trend, the rise of what's called non-endemic advertising.
Right. Non-endemic.
Now, just for anyone maybe not familiar with that term, non-endemic basically means ads for stuff you can't actually buy on the app you're using.
Like those examples we mentioned earlier.
Exactly. Financial services, stock trading apps, real money gaming. You can't buy stocks on Blinkit. You can't sign up for that credit card right there. But you're seeing the ads.
So what's really intriguing is why quick commerce is becoming such an attractive place for these non-endemic advertisers.
Good question.
Ishink Joshi, he's the CEO of Mobavenue, a marketing tech platform. He offers some really valuable insights here.
Okay.
He points out that the higher frequency of orders, and interestingly, the greater amount of time users spend on these apps compared to some others, That makes them really appealing for advertisers trying to grab attention.
More time.
Yeah.
Really. Even though the delivery is fast.
Well, think about the tracking screen time, plus maybe browsing time before ordering. It adds up, apparently. And Mobavenu, they're actively involved here.
How so?
They're partnering with big banks like Kotak Mahindra, HDFC Bank, and CreditBee to market things like credit cards and loans right there in your quick commerce app.
Wow. So the banks are really seeing this as a key channel.
Seems like it. It really underscores how seriously they're taking it.
We also get a really interesting anonymous take from a marketing exec at a real money gaming firm.
Oh, yeah. What did they say?
They emphasize that the higher and more stable rate people order on these apps gives them much more confidence to, ramp up their advertising compared to platforms where user engagement might be more hit or miss.
Okay, so it's the predictability of the audience showing up regularly.
Exactly. It's like they've found this reliable window to grab your attention.
Makes sense.
And get this, according to a former executive at Zepto quoted in the article, the ad revenue being generated here might even be starting to pull advertising budgets away from the traditional digital giants.
You mean like Google and Facebook?
Yeah, that's what the source suggests. It's a potentially significant shift in where companies choose to spend their marketing money to reach you.
That is significant. And if we connect this to the bigger picture, a Goldman Sachs report projects that quick commerce is expected to generate 5–6% of its gross merchandise value. That's the total value of everything sold, the GMV,
Right.
from advertising by FY26.
5 to 6%? That sounds like a lot for just ads.
It is. That former Zepto exec we mentioned points out that this level would put them right on par with established giants like Amazon and Flipkart in terms of ad revenue share.
Wow. Okay, so that really shows the scale of this opportunity.
Absolutely.
Which brings us to a really critical point, the sheer necessity of this ad revenue for these quick commerce players.
Right. Because making money on just the deliveries is hard.
Exactly. For platforms like Blinkit and Instamart, which are part of publicly traded companies, Zomato and Swiggy, respectively.
And Zepto, which is reportedly gearing up for an IPO.
Right. For all of them, the pressure to show a clear path to profitability is just immense. The market demands it.
And as our source rightly highlights, they're also facing more competition now, aren't they, from the big guys?
Yeah, Amazon, Big Basket, even Flipkart are stepping up their game in this space. They have deep pockets and huge customer bases.
So this extra ad revenue stream, it could be absolutely vital for them, a lifeline almost on their journey towards becoming sustainable businesses.
It almost sounds like they stumbled upon it out of necessity. The article emphasizes that these ads are like basically free money for the platforms.
Well, yeah, think about it. They've already built the app. They have the users coming.
The screen space is just there.
Exactly. The added cost of displaying one more ad is minimal, tiny.
And the financial impact. Pretty substantial, it sounds like.
Hugely. Karan Tarani of Elara Capital is quoted saying that over 95% of the revenue from these ads flows directly to their EBITDA.
95%. Straight to EBITDA.
Pretty much, that's their profit before things like interest, taxes, depreciation. Almost all the ad money goes straight to that bottom line figure.
Okay, that really underlines just how lucrative and, frankly, how important these ads are becoming for their overall financial health. But
Okay.
there's always a but,
Good.
right? As with any seemingly perfect scenario, there's got to be a potential downside.
User experience.
Bingo. The impact on your experience as a user. We've all been annoyed by irrelevant ads online. The question here is, why am I seeing ads for things I can't even buy on the app I'm using to get groceries delivered? It feels a bit weird, doesn't it? Counterintuitive.
Yeah, it can feel that way. But our source sheds some light on the strategy behind it. And it largely boils down to one crucial thing: timing.
Timing. How so?
There's a key difference between endemic ads. Those are the product-related ones you see while you're browsing, deciding what to buy.
Right, like people who bought this also bought, or a special offer on this.
Exactly. Those endemic ads pop up while you're still deciding, filling your virtual cart.
Okay.
But these non-endemic ads we've been talking about, they mostly come into play after you've finished your purchase.
After. Where?
Particularly on that order tracking screen.
While you're waiting.
Precisely. Ishang Joshi makes a great point. Once you've placed your order, you're probably not going to immediately place another one.
Right. No, probably not.
So the platform strategically uses that brief window of anticipation while you're waiting to show you these other kinds of ads.
And that order tracking screen, a senior ad tech figure points out, it commands undivided attention.
Totally. You're literally just waiting and watching for your delivery to show up.
It's a captive audience
Yeah.
in a way that even like regular e-commerce sites or social media feeds don't quite replicate with the same intensity.
Exactly. On Amazon, say, you buy something, you close the app, you might not think about it until the shipping notification comes.
Right.
But with quick commerce, that wait time is short and you're actively engaged tracking the little bike icon in near real time.
Yeah, you are. Staring at it sometimes.
So during those few minutes, the platform has a direct line to your attention. It's almost guaranteed engagement.
Okay, that makes strategic sense.
Uh,
Our source mentions that while this non-endemic advertising can be a bit seasonal, it can still make up a pretty significant chunk of total ad revenue, somewhere between 8 to 15%, according to that former Zepto exec.
8 to 15%, just from those other ads.
Yeah. So despite maybe annoying some users, it's clearly a strategy with a big financial upside for the platforms.
Definitely worth it for them, it seems. But beyond just the timing, there's another compelling reason for the advertisers themselves.
Okay.
It boils down to getting access to a really specific and valuable audience.
Which is?
People who are actively spending money online.
Yeah.
Right now.
Ah, the transactors?
Exactly. Our source emphasizes that quick commerce users are incredibly trackable. They provide direct data on their transactions. That goes way beyond just guessing based on social media likes or browsing history.
That's a key difference, isn't it? They actually buy stuff.
Yeah.
Not just that they follow a brand page.
Precisely. The former Zepto exec gives some really good examples of how this richer data can be used.
Like what?
Like, maybe a company like Mahindra could infer car ownership if you're buying car accessories through the app.
Oh, interesting.
Or banks could target users who regularly buy premium items with specific offers for personal loans or high-end credit cards.
Okay, so it's using purchase data to make educated guesses about the user's broader profile and needs.
You got it. And Shank Joshi also highlights the sheer number of credit card and UPI users in India who are actively using these platforms.
Yeah, that's a huge group.
For banks, fintechs, insurance companies, these are incredibly desirable potential customers. It's a direct line to people already comfortable with digital financial services.
It's not just finance, right? You mentioned electronics.
Yeah, even consumer electronics brands are apparently starting to use these platforms, maybe to generate buzz around a new phone launch, for example.
Oh, who knew?
The core demographic seems to be the key. People in cities, digitally savvy, with a regular monthly spend on these apps.
That's exactly the audience lots of premium brands want to reach. Both Joshi and the ad tech exec agree on that.
And Joshi makes that crucial distinction again. He calls these users transactors, not just viewers like on YouTube.
Right. The intent to spend is already there. They're in buying mode, essentially.
Which makes them a much more qualified audience for certain kinds of ads.
Okay. So, despite all this clear potential, this access to transactors, our source also dives into a pretty big challenge advertisers are facing right now.
Let me guess. Measuring if it actually works.
You got it. How exactly do they measure the ROI on their quick commerce ad spend? They're getting screen time, sure, in front of a good audience.
But are people actually clicking? And more importantly, are they converting into actual customers for these non-endemic things like loans or gaming apps?
Exactly. That uncertainty is a major hurdle. Our source points out that quick commerce has quickly grabbed a decent slice of digital marketing budgets.
How much?
Around 2–3% in a really short time, according to that gaming exec. And they expect it could hit maybe 10% in the next couple of years.
Wow, 10%. That's a huge shift in spending.
It is. And advertisers need to be sure it's actually paying off,
Absolutely. You can't just throw money at something indefinitely without knowing the results.
But the fundamental issue, as the former Zepto exec puts it, is that advertisers don't really know what success looks like yet in this new space.
What do you mean?
Well, they're used to metrics like customer acquisition cost, CACs. But just plugging quick commerce ad spend into those old formulas isn't always clear or helpful answers.
Right. The context is different.
The marketing exec from the gaming firm offers a really good perspective here. They said, while advertising on quick commerce does scale, they can reach tons of users.
Okay.
It currently lacks granularity in targeting, and attribution, knowing exactly which ad led to which action, is proving really tricky to nail down.
Yeah, I can see that, especially if the conversion happens off-platform later.
Which also brings up that fundamental question. Where do these ads fit in the traditional marketing funnel?
Awareness, consideration, purchase.
Right. Are they just for building brand awareness or driving consideration? How can they drive a purchase if you can't buy the advertised thing right there? It creates this like logical disconnect.
Yeah, it does. If an advertiser wants app downloads for their own service or website visits.
How do you definitively link that back to seeing an ad on Blinkit an hour ago?
It's a challenge, as Ishang Joshi points out, very difficult to track directly right now.
Though, the former Zepto executive makes a fair counterpoint
Which is?
that attribution challenges aren't exactly new. They're an ongoing issue across basically all e-commerce advertising.
Yeah.
True. It's never perfectly clean.
So their argument is kind of like, can advertisers really afford to just ignore this rapidly growing platform with this super engaged audience just because the measurement isn't perfect yet?
It's a good question. A gamble? Maybe.
Perhaps. And there are also those practical user experience things we touched on.
Like the clunky credit card application.
Yeah. Our source mentions that potential for a jarring experience. You click an ad in this slick, fast app, and suddenly you're in this multi-step, maybe slow application process. It doesn't quite match.
No, it breaks the flow. And that promise of super specific, hyper-local targeting.
Down to the PN code and spending habits.
Yeah, that dream scenario for advertisers.
Mhm.
It's still mostly under development, according to both Joshi and the former Zepto exec.
Right. Building that kind of sophisticated targeting takes time, tech, and probably enough advertiser demand to make it worthwhile.
So it's not quite there yet.
Not fully. But looking longer term, our source does offer a bit of optimism.
Oh, good. How so?
The gaming exec uses Truecaller as an example, the caller ID app. They noted how Truecaller's advertising options and tracking got way better over time once they really focused on ad revenue.
Ah, so the platforms learn and adapt.
Exactly. It suggests that quick commerce ad capabilities are also likely to evolve and get more sophisticated as the market matures.
And the simple fact that advertisers are still putting money in, despite these measurement headaches.
That suggests they are seeing some real value there, right? Even if they can't perfectly quantify it yet with traditional metrics. That's the view of the former Zepto exec, anyway.
It must be doing something for them.
And that Skoda Kushek test drive campaign on Zepto is a fascinating example.
The car test drives on a grocery app.
Yeah. Wild, right? But while it might not have led to easily trackable car sales directly from the app,
Probably not, no.
it generated a ton of buzz online. Social media chatter, articles in the marketing press.
Okay, so brand building,
Yeah,
top of funnel awareness.
exactly. For some advertisers, especially right now, maybe that's considered a form of success in this new space, generating buzz, getting attention.
Interesting. So maybe the definition of success needs to adapt too.
Could be.
So, okay, let's try and bring this all together for everyone listening. It's clear that quick commerce is changing fast, isn't it? It's evolving way beyond just, delivering your groceries in 10 minutes.
Definitely. It's rapidly emerging as this significant, really dynamic advertising platform with its own unique quirks and clearly a ton of untapped potential for the platforms themselves and for the advertisers trying to reach you.
So the key takeaways for you, our listener, seem to be, first, the sheer amount of money these platforms are now making from ads. It's substantial.
Huge numbers. Second, the incredibly diverse range of companies advertising finance, gaming, even cars, not just grocery brands.
Right. And third, those ongoing but maybe temporary challenges in actually measuring how well these ads are working.
Yeah, the attribution puzzle.
But maybe one of the biggest insights here is that unique value quick commerce offers advertisers. It's direct access to a highly engaged audience.
An audience of active spenders.
During that moment of focused attention, that brief but valuable window while you're eagerly waiting for your order to arrive.
That tracking screen time.
Exactly. So here's a final thought to leave you with. The next time you find yourself tracking your quick commerce order on your phone.
Staring at that little icon.
Yeah. Consider not just when your stuff will arrive, but also who else is trying to grab your attention in those valuable few minutes.
What does that ad say about how brands see you and how they're trying to reach you in these super convenient, immediate moments?
It certainly offers a fascinating look at, well, your own consumer behavior and just the constantly shifting, evolving world of digital advertising. Something to mull over next time you order that late-night snack.